Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Doug Simon looks at crop conditions across the country. Karla Jenkins talks about developing a drought plan for pastures and ranges. Lee Schulz describes strong international demand for U.S. pork, and Charles Shapiro explains how you can test soil characteristics. Doug Simon from Tredas is our corn and soybean market analyst this week. The U.S. Department of Agriculture on Wednesday projected American farmers will produce nearly 14.3 billion bushels of corn and almost 4.3 billion bushels of soybeans. The estimates are slightly higher than the agency's earlier forecast and helped cool commodity markets that had been pushed higher with the help of warmer weather. The July soybean futures contract on Monday settled above $10 a bushel for the first time since March, and July corn after Monday's close was its highest since February. We talked with Doug Wednesday afternoon and began by asking about the current condition of crops across Nebraska.
Well, we had a drop in the corn crop in Nebraska last week and also in the soybean crop, and not only in Nebraska but across the country. And we've had some pretty good rains over the 4th of July time period in kind of the Lancaster, Cass County area and over in Iowa, but that's definitely not indicative of what's going on in the state. It continues to be dry out in western Nebraska and up in the northern part of Nebraska. We've had some good rain, the other night up by Norfolk and up toward Battle Creek and down in that neck of the woods, an inch to inch and a half down by West Point. And we had a little bit, even I think last night, up in Saunders County. So there's some areas that are getting some low rains. Kind of the way the weather conditions, there's a lot of debate about what's going on in the models. We're starting to see some of those monsoon rains coming out of the southwest here the last couple of days. Hopefully we'll get some more of those going forward, but right now the conditions are pretty tough.
Nationwide, have the conditions been bad enough to affect overall production?
I think when you look at the Dakotas, you look up there, they've had really, really dry conditions. You look at their percent of normal precip is low. You look at their temperatures, they've been high. And, I think if you look at a cut of maybe 20% of the production up there, there's about 200 million bushels that could come out of the U.S. production because of that area. There's areas in northern Indiana, which Indianapolis, I guess that's north central, that have had too much rain early on. We had multiple replantings there. Now we've had ongoing rain, so there's issue there. Talked to another analyst that I know and work with in Evansville, thinks his crop's pretty good in that area. There's parts of Iowa, parts of Illinois that are below normal as well. So there's definitely some areas that are struggling to have the moisture that they need to have a record crop.
Were there any major takeaways from today's WASDE, do you think?
They didn't change the U.S. yields on corn or beans. They don't typically do that in July. Might do it in August potentially, but really I would think that stuff would be down the road as we get to know a little bit more about the crop and the weather. On the wheat, the numbers there were a little bit maybe actually higher than what the average guess was, but I think people are expecting maybe to see more abandonment up in the spring wheat areas. And really that spring wheat's been the thing that's been a real rocket ship and taken off and given support to both the corn and the beans. If you look at the other numbers there wasn't really anything too terribly new. The big deal is that we saw a big increase in the world carryout of corn, but that was really essentially because we had more corn acres in the U.S., bigger carryovers from last year, and so you add 6 million metric tons to the world numbers, and to the carry-in and also to the actual carryover, and that might have been a little bit more than people expect and a little bit negative for the corn market.
What is the overall strategy that you want producers to use with as much volatility as we have seen?
That's how we always like to look at the market, more from a bigger picture and trying to predict weather day in and day out. Every 6 hours a new weather model comes out, Canadian, American, European, and they've got a new American model. If you want to try to base decisions on that, I think it's pretty tough. So we always try to focus on pre-harvest marketing. We want to sell February through June, sell increments over time. And then question is, you want to do that in concert, consistent with your crop insurance value or the amount of quantity that you're going to have there. But if you're worried about prices going higher, or if you think you're going to have dry land, yields are going to be low, if you want to have some upside, you can use some things through options. Actually, options are pretty inexpensive. I shouldn't say inexpensive, but the volatility is low right now. It's running about 10 points below normal. So actually to go out and buy calls or something like that to go with hedges is a good way, as a strategy you can put in place that gives you some flexibility.
You said that basis, before we talked here, you said that basis might be a key to look at here if production is affected to the north. Why?
I think so. We always talk about futures, basis, carry. Those are the three important things you do, I think, to be successful from a marketing standpoint. But if you take 200 million bushels of production out of the Dakotas, we saw a lot of corn that flows, from that area into Nebraska over the last few years. We've also seen corn that comes out of northern Kansas into Nebraska. If you have reduced crops, we'll see less corn coming in from those markets. You see that especially over in the Columbus and the markets over at Blair, where we get trucks coming down from the Dakotas. We won't see that. I think that'll help our basis here. And then also if our dry land production in Nebraska, instead of being 200 bushels versus a 160 APH, if this year is closer to that APH, you don't have as much, that larger production in that eastern Nebraska, western Iowa. So I think our basis level should be much better next year. So we definitely, from a hedging standpoint, we want to hedge and look at trading that basis later.
Next week, Roy Smith will join us to look at corn and soybean markets. The latest report from Nebraska's National Agricultural Statistics Service lists 40% of the state's pastures and ranges in good to excellent condition, with 19% categorized as poor to very poor. Many areas have been dealing with below normal precipitation. Last month was the state's second driest June on record, with data dating back to 1895. This week's U.S. Drought Monitor indicates 16% of Nebraska is in moderate drought, the most since May 2015. Meanwhile, extreme drought, listed as D3, has expanded in the north. South Dakota has its highest chunk of D3 since 2013, North Dakota has its most since 2008, and Montana is experiencing its worst conditions in more than 12 years. Earlier this week, we talked with Nebraska Extension's Karla Jenkins about planning for less than ideal situations on pastures and ranges.
I think it'd be great if producers were thinking through a drought plan and not only planning for a drought, but putting on paper some trigger dates for when they are going to make certain management decisions. Because as ranchers, I think we're always eternal optimists, and so we just keep waiting for that rain to come. And that's kind of a bad scenario to find ourselves in, because we're always like, well, maybe next week it'll rain, maybe next week it'll rain. If we can just hold on, it'll rain. And that's just not a good drought management plan at all. So we need to have some plans in place, and then we need to have certain dates that we're going to implement those if we've not received the rain that we need.
Let's talk about some of those options. So early weaning, one of them?
So early weaning is always one of the first things that we mention as a drought mitigation plan, and that works as long as the calves are either sold in or moved into confinement somewhere and fed somewhere off of range. It does help reduce some forage intake on the cow by removing lactation. That decreases her nutrient needs and her forage intake a little bit. But that calf is eating quite a bit of forage by the time he's a weaning age or just prior to, and certainly if we take the milk away from him, he's going to eat more forage. So certainly need to do more than just wean him, need to sit down with the Excel sheet and figure out if the best thing is just to sell him at a lighter weight now, or if the better plan is to put him in dry lot and feed him until you're ready to sell him at the normal time.
Would you like producers to think about reducing stocking rates already?
I would like for producers to start thinking about reducing stocking rates and trigger dates. By such and such date, if we have not received X amount of rain, we will take this of the cows off. So there may be some older cows that are maybe not your best producer cows. Maybe you were planning on selling them after weaning anyway because they're older or they're not doing as well or their calf is not that great of a calf and you were going to sell them anyway. Make a plan and get those pulled out of there and go ahead and sell those cows. Do we have some other cows that maybe we would have kept another year or two that maybe we don't want to? So that's an option.
You want to think about feeding in confinement, but is that something that you can do on the fly?
So we can do some confinement feeding on the fly, actually, and that's certainly another option. The caveat to that is that everybody wants to save every cow they have that isn't just the small percentage that we were going to cull anyway. You really need to put pencil and paper to it and decide if the feed cost can be justified by the projected market. Am I really going to make money holding these cows? But if you feel like you are better off to hold them rather than liquidate them and then try to buy them back in a different market, then there are certainly some great options for confinement feeding, and it doesn't have to be in a feedlot. We can certainly do that on pivot corners or fallow ground or maybe the old calving ground that we normally use in the spring, something like that. Might be some feedlots with some empty pens right now too. So definitely some options there that we need to have a plan for.
I know we're a ways from 2012 levels, but are there any applicable lessons from that year and the years after that that hold through into situations like this?
There could be some applicable lessons. One of the things that happened in 12 was we normally can't feed our way out of a drought, so that's why I initially cautioned you really got to put pencil and paper to this. But that turned out to be a very widespread drought, and so a lot of cows were liquidated, and therefore buying cows back a couple of years later when it did rain was very expensive. And those may very well be the cows that we're looking at right now. Maybe we bought back some cows at the end of that drought, and liquidating them now is going to be very expensive. So some of the things that we learned during that drought is we can certainly limit feed energy-dense byproducts with some poor quality residues in confinement and maintain those cows and get through the drought and get them off of those pastures that are going to have some rest if we get into some severe drought conditions.
You can find more resources about feeding cows in confinement through a link on the Market Journal website. We also have a look at hog markets this week with Iowa State Extension livestock economist Lee Schulz. Even with larger anticipated supplies and more animals on the farm, pig prices have continued to increase. The USDA currently expects 2017 pork production will be about 4% higher than a year ago, and its latest inventory report showed the most hogs and pigs ever on June 1st, with records dating back to 1964. Even so, the July lean hogs futures contract set a lifetime high with Tuesday's close over $92 per hundredweight. That mark is 33% better than the contract's 2017 low set less than 3 months ago. When Lee joined us Thursday morning, we started by asking why prices have continued to charge higher with the outlook for more pork in the future.
Well, there's kind of an old adage that higher supplies equate to lower prices. And we've really seen the hog market go against that axiom this year. And really, once you dig into the components of both supply, which we know are larger, but the demand situation, I think that points to why we've seen prices where they're at and why they are larger, even though we've seen larger supplies. Really, you have to look at the international trade. We're up 14% year to date through May of exports. Also, imports are about 3% less. When you really look at the star markets, 7% increase in Japan, 26% increase in Mexico, 1% in Canada, and 34% in South Korea. Now, what's been a bit of a drag is the China trade, especially when we look at it from a year-over-year standpoint. But remember, last year was large exports to China. So far, we've seen them down about 22%. And also about 16% down to Hong Kong. But overall, exports have been strong, and the reason why we've seen prices where they're at.
So where are per head margins right now?
Well, if we're looking at margins for farrow to finish on a cash market basis, we've seen the first quarter of 2017 in that $12 range. Second quarter was in the $17 range. Third quarter looks to be about that $34 range, really driven by what margins we're experiencing right now. And then back down to about, I think, $3 loss or so in the fourth quarter. That nets us about a $15 profit per head in 2017. If we fast forward to 2018, I think we're looking at still profitable margins, but back down to that $1 to $2 range.
How strong are prices for isoine and feeder pigs?
When we look at prices for, particularly the SEW 10 to 12 pound pigs, we're about $5 higher than we were a year ago at this time. Really important to understand the market for when those pigs are going to be finished out and hit the market. SEW pigs, we look about 6 months ahead, so we're looking at about the lowest prices from a seasonality standpoint in those. If we're looking at the 40-pound feeder pigs, August typically is the lowest prices. I think if we're looking at the feed situation in particular, seeing that corn and bean prices have increased as of late, I think that's really where we're going to see the first impact on the hog market, is if we continue to see those prices higher, really due to the weather situation we're experiencing, we could see that first impact on the wean pig and feeder pig prices. So far on margins, we haven't seen much of an impact, maybe $1 to $2 on the cost of production. What's really offset any of that is the increase in lean hog prices.
Did June's inventory report contain any noteworthy signals to you?
Very few surprises in the short run. If you look at pre-report expectations, we were all within the range except for one number, which was the March-May sows farrowing. That came in about 1.5% larger than pre-report expectations. That does have implications longer term, though. We've really missed the mark on those sows farrowing when we look at the intention estimates. You have to go back to 2015, March, May of that period to see a time we've actually seen lower actual farrowings compared to the farrowing intentions. What that suggests is we'll continue to see USDA revise upward those sow farrowing estimates. And so I think what that means is pig crops could be larger than we expect. And if we're looking at where this could occur bearish on the market, I think is looking into fourth quarter potentially of 2017 and first quarter of 2018 if we have those larger pig crops, especially in the June-August period.
Parlay that answer into where you see prices going overall here for lean hogs.
Look at the third quarter of 2017, and we're looking particular at the Iowa Southern Minnesota negotiated series. 74 to 79 for that third quarter, back down to 58 to 62 for the fourth quarter, back up to 62 to 67 for the first quarter. And I think as we get into the second quarter of 2018, we're in that 69 to 73 range.
As Lee mentioned, U.S. pork exports have been up year over year. For the month of May, Mexico was the largest buyer, taking nearly 30% of American shipments. Japan accounted for 22%, China, South Korea, and Canada rounded out the top 5. We mentioned in our previous episode of Market Journal how ag producers and consultants could learn more about soil health at the first 2017 Crop Management Diagnostic Clinic near Meade on July 18th. At the event, Nebraska Extension soil scientist Charles Shapiro will discuss soil characteristics such as bulk density, porosity, and infiltration. We talked with Charles about that recently, but we started by asking about his long-term tillage study located at the Haskell Ag Lab in northeast Nebraska.
Well, we started a research project in the late 80s where we were comparing no-till, plow, and disc. And we've been doing that with several nitrogen rates and corn on corn and corn soybeans since that time.
And what does the research show in summation?
In summation, what's interesting is looking at the weather patterns and the tillage effect. And I have a student working on that right now, and we've broken up the rainfall into dry years, normal years, and wet years. And the no-till, as you would expect, does a lot better when we have drier weather. When we have normal weather, it's kind of a wash. And in the wet weather, we actually get a very slight increase where we disc.
Is there something a farmer can do on his or her operation to try to find out what their soil looks like just below the surface, to try and find out if they have those characteristics?
Well, what we like to say is that when you go to no-till, you change a whole slew of soil properties. and for the most part they're beneficial. So what we have coming up at the NREC, formerly ARDC, in July 18th is a soil health clinic where we'll look at several properties, biological, chemical, physical properties that let us assess a field. Now, most of us are used to the chemical properties. That's the NPK, organic matter, pH. What is new on the horizon, and it's been kind of talked about for the last 10 years, is some of the physical and biological properties. So the no-till, when you don't disturb the soil, you create a much better soil structure, which will, in many cases, allow more infiltration of rain, which in this year, where it's been so dry, another inch of rain could give you 10 bushels of corn. And so it's very important that we improve our infiltration as well as our water holding capacity.
You brought tools along today to show some of these properties. Tell me about the process that someone could do.
Okay, so about 10 years ago, they came up with a soil quality kit, which takes the scientific research techniques that graduate students use all the time and simplifies them so a farmer could do these tests in 5-10 minutes. And so what we are going to talk about at the field day is doing an infiltration test so you can determine how much rain your crop can take, and usually we measure it in inches per hour. Some of the soils only take 1/4 inch an hour, others 2 inches an hour. And of course, more is good, but too much is too much. So some of those sands up in the sand hills take water too quickly. So you can measure that. And so what we would like to recommend is that people, if they're going to try new practices or they have situations in their field, they can measure some of these things like infiltration and a couple different spots and get an idea of what's happening.
Are you going to tell me how, or do I have to come to the event?
Okay, so we have a ring. It really doesn't matter what size the ring is, but you could take a coffee can, cut out the bottom, and then you put it in the soil, maybe 1 inch, 2 inches, and you have to figure out what 1 inch of water would be in there. You've got to go back to your high school math. And then let's say you put 1 inch of water in there. We put plastic on the soil. We slowly put the water in there. Then we pull the plastic out and time how long it takes for that water to infiltrate into the soil. And so that gives us our rate.
And what about compaction?
Compaction is a physical problem from putting heavy equipment on the soil, and that squeezes out air. And so we can measure that. We call that bulk density. And then you could take a similar can. Usually we use a smaller diameter, and we put it in the soil, carefully remove it. And if we know the volume, and then we dry the soil and weigh it, and that gives us an indicator of the density of the soil. So usually when you move to no-till, sometimes you get a little more compacted layer in some places, but then you improve your bulk density in others, especially with cover crops or adding carbon residue to the soil. You'll make the soil fluffier, let me say, and that will hold water better as well.
Charles will discuss this topic July 18th at the Eastern Nebraska Research and Extension Center. This crop management and diagnostic clinic also offers 6.5 soil and water management continuing education credits. Now, with this week's weather outlook, here's Stonie Cooper from the Nebraska State Climate Office.
As always, Jeff, you make the best choices in tie wear. We finally started to see some relief from what had been increasingly dry and drought conditions. Particularly if we look at the precipitation as estimated from radar, the Greeley to Pierce County area had seen some significant moisture along with some rains in southeast Panhandle and southwest Nebraska. Looking at the week ahead, what you are going to see day after day is a somewhat typical midsummer high plains pattern of ridging with weak surface features acting as a catalyst for what we call mesoscale convective systems. Climatologically speaking, though, nearly 60% of Nebraska's precipitation comes from these storm systems. So this pattern is significant for bringing in rain when dryland, corn, and soybeans need it the most. The ridge to our west and north will push the upper atmosphere temperatures up over Nebraska above what we call the capping temperature, so things should be dry for the day. Likewise, the relatively slow-moving upper level pattern will continue to bring heat and capping to storm growth on Sunday. Only weak surface features off of the front range show up as precipitation, but understand this bullseye over eastern Colorado is for late Sunday night. Ridging remains in play for Monday, but we will start to see a dry surface trough begin to pump moisture into the plains with southerly winds. Precipitation will still be sparse due to the capped atmosphere, with remnant rain in western Kansas from the Colorado storms the night before on Monday. I hate to imply significantly predictable potential for rain on Tuesday, but models are indicating that one of those weak features is starting to develop at the surface in southwest Nebraska. This sets the stage for precipitation chances to increase starting late Tuesday, with a quasi-stationary boundary hinted at developing over northern Nebraska and finally providing enough oomph to break the upper level cap to storm development. Our feature that started to form on Tuesday is now modeled to become a more of a going concern on Wednesday, with the low deepening over western Kansas. Understand that these weak surface features are often associated with a disjointed precipitation regime that is in place hundreds of miles away. In this case, the quasi-stationary boundary is forecasted to set up over northern and central Nebraska, with resulting storm development along and to the north. Thursday continues the unsettled weak pattern, with northwest flow aloft and a quasi-stationary boundary wafting back and forth across the plains like a flag in the wind. Storms will typically initiate along that boundary and travel along it, feeding off of the high moisture to the south of the boundary in the overnight hours. Friday sees more of the same. You can interchange any of the days I've shown so far and then have the same result for any other day during this forecast period. Ridging dominates. And weak surface features along with storm outflow dominate the wheres and how much is for precipitation. Irrigation is a concern this time of year, and taking the same model data that I've just shown and looking at the soil moisture availability through to Thursday shows a deficit when compared to previous years of over 2 inches in the root zone for much of north central portions of Nebraska. Tune in next week when Al will give a dandy forecast using his dog's horoscope.
Thanks, Stonie. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean conditions, developing a drought plan, hog prices, and soil quality. As always, you can keep up with Market Journal during the week by following us on Facebook, Twitter, and Instagram. Next week, Roy Smith will be our market analyst, and David Widmar will talk about the importance of off-farm income to farm households. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.